There we go.
Good morning.
Good morning, Dave. How are we doing this fine Tuesday, the 24th?
Yeah, can you believe it's September already? September 24th. Jeez.
Welcome to fall.
Yep.
Good morning, Greg.
Sham, good morning.
My dog Boone is staring at the computer, so he says good morning too. Apparently he's watching today.
Ah.
You made it back safely?
I did. Uneventful drive.
Those are the good ones. If there's drama, then there's trouble.
Yep. Traffic was light. Roads were clear. It was sunny out. It was a beautiful day, actually. My wife keeps telling me, she says, why don't you just fly down? It's an hour. It's not, it's not that far. Why don't you just, well, this time I had some stuff I needed to take down to our place in DC. And so I had actually kind of a car full of stuff. But even when I don't have stuff to bring, I like to drive sometimes. I don't know. I just find it very relaxing, and I get a chance to think, and
Oh yeah, definitely.
Yeah, I like it. Flying, actually, it takes me 6 hours to drive, or it takes me an hour to get to the airport, an hour and a half to wait for the plane, an hour for the flight, and then a half hour to 45 minutes from the airport to my place. So that's like 5 hours already.
Yeah, you're only picking up a little bit, right?
Yeah. And I got the freedom on the road to stop, eat, grab some coffee.
You're not sandwiched next to somebody else.
Yeah. I talk to people on the phone. I just kind of I don't know, I kind of chill. I kind of like it. I listen to music.
You have epiphanies.
Yes. Once in a while I do. Once in a while. In fact, I did that on Sunday. I was coming back and I had this idea. I don't know if you saw Brad Kime's stream Sunday morning.
I did. I caught the last couple ones. I haven't been able to hit the live ones, but I'm grabbing the recordings.
Okay, yeah. And so he was reading an article about the repo market and the interest rate spikes in the overnight markets. And so on yesterday's show, he called me and we talked about that a little bit. We can talk about that today too. It's pretty interesting. Morning, Alexander. So we got a little bit of dip in the YMNQ. I don't think it's going to last, though, to be honest with you. We got the bump up that we're looking at 920, so it was right around the open. But boy, then it just dropped like a rock.
Yeah, there was a lot of activity before the market opened, then it's kind of stagnant. It was interesting.
Yeah, I think the trend is up though. So this little drop here is not going to last, in my opinion. But we'll see.
Yeah, I got an email from Eric too. He's always doing more stuff too. He's testing out, so I threw it on the ESRTY this morning too, and that's a nice looking trade there.
Oh, really? Yeah. No, oh, wow, that is nice. Yeah.
Because that was one thing I was watching this morning too. Is like, yeah, we got what do we call it, spaghetti going on in here. So yeah, that didn't make me very warm fuzzies. Yeah, like you say, here we go. It's starting to come back around, and now, yeah, I like the ESRTY too. So, people have asked about it. So yeah, put the same mechanics on the same pairs. I might build a couple just to see what's out there. I think I had lows way back on your HLM one days. The crazy guy did the NQRTY or whatever. That'd be interesting to see.
Right. Well, that looks like a very nice pattern right there on ESRTY.
That's beautiful.
Yeah. Real smooth. Looks like the ribbons there, the lines are EMAs are really nicely formed. But boy, yeah, that's a beautiful pattern this morning. Have you traded that at all?
I have not yet. Today was literally the first day I built this chart, so you might have missed the one I was on last week. I failed to save, so I'm rebuilding some things because I forgot to click save. And I saw, yeah, I'm rebuilding a bunch of my charts, and I was hot and heavy at it this morning. It's like, all right, I got to get some charts rebuilt.
Now, is Eric trading ESRTY? Did you mention?
He is beginning to look at it. I don't believe he's told me if he's taken one or not.
Because I think you need to do 2 RTYs to 1 ES.
That's right. So we did.
Morning, Mike.
I lose track of who's who.
Yeah, I think you need to do 2 RTY to an ES.
Yeah, especially when you start doing the micros, right?
Yeah, for sure. For sure.
I think it's like a 3-to-1 almost on the micros if we figured the math out right.
Mm-hmm.
The Sham says she took the short using the micros and the VA. Small profit using the EMA strategy.
Okay.
As long as you get some profit there, right?
Yeah, get something out of it for sure. But that's it's an interesting trade. I did trade ESRTY for a little while, but I found the P&L to be kind of inconsistent.
Yeah, that's what we've talked about in the past, right? Is if you didn't have the right ratios.
Yeah, I could have almost gone. Right. Yeah, I could have almost gone 3-to-1, 2-to-1 for some reason. In certain situations, it didn't generate the profit I thought it would.
Yeah, I think it came down to depending on if it was going up or if it was going down and where the profits come from. Absolutely. I remember that discussion.
Yeah.
Morning, Mike.
Now, with the micro E-minis, though, you might be able to fine-tune the ratio a little bit. So maybe it's like 2 ES to maybe 5 RTY or something.
Definitely.
Yeah. How's everybody doing this morning? Hope everybody's doing well. We're going into the fall season, guys, so heads up. I think there's some stuff building, I think, that we could see volatility come back into the market. You know, we're very, very close to our old-time highs. And, but we haven't exceeded them, at least on the ES that I was looking at. I was looking at the futures contract. I was looking at the S&P 500, the SPX too. We got real close to an all-time high on the daily SPX. But we did not exceed it. High back on July 26 was 30.27, and our high in the most recent rally here is 30.21. So we didn't exceed it. Short by 6 points. And if that holds and we start to see a little bit of a downturn here, we could see a very nasty little move lower. Typically what happens is you see a little bit of a higher high from the previous high. Sucks people a lot. A lot of people get sucked into that, but that making the new high builds momentum over time, and eventually it's going to break through that again and continue to move higher. But we did not break that high this time, at least in the last rally.
Yeah, I'm just getting my weekly dialed back in here. We'll pull that guy back over. What we got up here, if you guys didn't recognize it, was the ticks up on top and the 10-minute on bottom on the 3 major indexes that we watch. So I'm building the weeklies, so take a look at that, because those are, see if that's giving us any hint here. Swing signal, there we go. Oops, not that one.
Right now, the SEC is holding congressional hearings on cryptocurrency regulations.
Yeah, that is happening today. That's right.
Yep. In fact, they're live right now.
Interesting timing.
Yeah, especially it's kind of odd because the Bakkt exchange launched yesterday. If you guys didn't hear, well, actually launched late Sunday night, Eastern time. And they're starting to trade Bitcoin futures that are physically settled. But there's no regulation. It's just odd. The CFTC cleared them to launch. but there's no regulation at all. I just find that a very odd situation. And now I don't know what this deal is with the congressional hearings, if they're kind of scrambling to put together some sort of regulations at the last moment, after this launch by the NYSE. Very strange indeed. All righty. Yeah, look at that. You see, we didn't quite make a new high on the YM there, on the futures contracts at least.
Just what we got popping in.
Just a little short. Yep, going short on those. They're all down signals here.
All three are showing. We're all above the cloud, except for NQ's right in the top of the cloud there.
Yeah, it's been a little bit weaker than the YM and the ES. ES is a stronger one, it looks like. Sham asks, are they not using the CME infrastructure and hence being regulated? The CME is not a cash or a physically settled futures contract. It's a cash settled futures contract. They're using the NYSE parent company is ICE, the Intercontinental Exchange. And so, no, they're not using CME infrastructure at all.
I was going to mention that when you said that, because that is an important point when you say it's settled. People, like when they close their trades, it's actually Bitcoin that their profit and loss is in. It's not cash. It's not anything else. It's literally Bitcoin. So that's why this is a first.
Yeah, exactly. Yeah, you let that future contract go to expiration, you will receive the Bitcoin. You will receive Bitcoin.
That's different. So for people that are not sure about that, that means so other ones that have been traded on the market, if anything was settled, it was a conversion of what the Bitcoin to the currency rate was that your account settled at. So it wasn't an actual Bitcoin up or down, it was dollars. So that's the drastic difference of what's changing this week, which is where this world's going.
Yep, exactly. It's a big deal. It truly is a moment in history where you have a regulated exchange trading physically settled Bitcoin futures. It's a big deal.
Yep. Yeah, remember it for sure, because people will talk about it years down the road.
Yeah, Mike asks, have you heard Bitcoin halving sometime next year? It's in May 2020, I believe, or March. I think it's May. Yep, you're getting closer to that. That's a big deal because typically almost every single time it does the halving. And if you're not familiar with what halving is, it's the rewards that miners are given when they finish their computational algorithms for creating Bitcoin. The amount that they are rewarded for running these computations is cut in half. And so it also means that there's half as many Bitcoins being entered into the market. And that's a big deal. Every time it's done that, it's like, man, Bitcoin has gone ballistic sometimes 8-10 times the current price. So right now we're close to 10,000. We're just dipping under 10,000 now, but I've heard some people say it could go to $80,000 to $100,000 per Bitcoin. 8 to 10 times.
Wow.
The next halving after that is 2024. So May 2020 and then 2024 is another halving. And I think that's the last one before it I think that's like the last halving there is. Yep, there we go. Market's starting to drop pretty good. No surprise, YMNQ shooting higher. See that? That's exactly what I was talking about.
Markets go down, spread goes up.
Yep.
Not 100%, but the most common inverse correlation.
Yeah, I still haven't finished because I was gone last week, but I still need to do those stats. And I think that I think it's running close to like 80%. We'll get the official numbers here pretty soon. I'll finish those up this week. I think I got time to do that.
At the same time that one took off is right around the ESRTY is kind of running out of gas.
Yeah, the ESRTY was that led that move, really.
That was nice.
One of the things I did notice when I was doing the ESRTY kind of due diligence on that spread was that it tended to lead the YMNQ.
Interesting.
Yeah, I remember that now. Interesting phenomena.
Good morning, Andrew. Good to see you.
Hey, Andrew. How's it going, buddy? Andrew's been working hard getting the TradingView scripts ready. I have not checked your email yet, Andrew. You texted me at 11:16 at night, and I think I fell asleep at 10:15. Old man here. All right. I'm just going to grab some more coffee. I'll be right back. You want to go through the trade? We can go do that while everybody's here, and then we'll get into some news.
Yeah, no problem. I grabbed the coffee right before I clicked the button, too. That's why I was a couple minutes late. But, yeah, so we're starting to, let me pull over the spreadsheet. I haven't pulled that up yet. Definitely looking like a new long basing here starting. We got flat topped on the cross column. Bell curve hit a 0 and a red 0. Now we went to a 1 yesterday. So, and the binary trend is filling in. So we're looking like it doesn't want to go negative. It's failing to go negative. We're starting to go positive again, which is why we were seeing similar items on our 4-hour. Overnight, looking at either taking into account 2 or 3 bars, we had a slight downtrend. So that's why we have an up bias based on the 4-hour. And this was down. Now it's definitely coming back up. Then looking at the 1 minute, we had a downtrend there as well prior to the open. If I pull over the 1 minute chart here, bring it back to see more data. 7 o'clock's about there. 8's down here. So definitely down. These are different lines. I'm not sure what that is. Oh, that's my 4-hour chart lines in there. So everybody was a downslope slight, pointing towards the up bias, putting it all together. So the only one that wasn't an up bias was the cross column. It's flat at 6s, overbought, oversold is at a 7. So that's starting to tick back up. Not at a peak, not at the high teens or anything that we've seen before, 20s or anything like that, where we get the extended exhaustive signals where we're for sure going to reverse. So it's looking like this may start to go out positive again, which is what our TSA had. So bell curve was up, binary trends looking up. We're all filled in or filling out the first 4 columns. We had 1, then skipped a day, went down 3, 4, 6 to 7 up there, flat there. So that's the only one that's not up is the cross column. And then both the 1 and the 4 minutes. So we're definitely looking for ups. That's why Dave was saying he's not we're not very confident that this will stay down, which is why it's already coming back up. So looking at the daily chart, we see where that comes into play. So we see the 5th columns are coming up. Here's the dailies, a small little green 0.03 right now on the day. Since yesterday's close or yesterday's open, whichever way you want to say it. So that's where we're looking for another, because we were down here in the 5th column. So we're tracking for another positive upside. So that's the higher term is definitely to the up, which is why it translated into that. So we'll see where the day ends.
Yep.
And it sounded like, who was it earlier? It was Asham took a short just based on the line. So grab a profit when you can. Yeah, if it's against the overall bias, yeah, there's nothing that says I have to trade this, right? Everyone uses their own common sense and reading when you're in and out of a trade. So if you're using the multiple things we're doing with the EMAs here, and you say, oh, this is lining up for a short, not a long. We're not saying you have to take a long when the bell rings, right? Everyone does their own things. Everyone pushes their own buttons. So it's just overall bias, as we see, came down, coming back up. Very possible that this will end up on the day, which is where we get our high-term bias from, right? Or long-term bias, I should say.
Absolutely. I really like the new spreadsheet. I'm just finding it so much easier to read the spread. It's much, much easier. Loving it.
And I'm going to bring it up in case you missed it. Or if you heard me in the background, I was referencing everything on the spreadsheet there. So everybody kind of lined up today.
Good. Yes. Actually, everything was up. I think the TSA. I mean, every single indicator was up on that.
Yeah, I think that we mentioned the other thing that was the cross column was kind of flat at 6s, but.
Yeah, but I've noticed though that it can, if it holds a level like those 3 5s up there and the 2 6s, it tends, if it holds that level, that's a good positive sign. It doesn't work the same as the cumulative belt curve,
which had just begun to tick up. So there we go. I won't beat a dead horse, guys. You heard it while Dave was getting coffee. So we'll cruise back over to some news if you got any.
Yeah, absolutely. So I don't know if you guys know what's going on in the repo market. I don't know if you heard some of the comments I made. I was on Investment Perspectives yesterday with Brad Kimes, and I made some comments about what's going on in the repo market, the overnight market for interbank lending. But it's getting kind of weird. And I know, Dan, you tweeted out, I think something just after last week, the Fed started to inject liquidity into the repo market. And it continued. I mean, it wasn't a single day. Then there was another day. And then there was another day. And so that every single day last week, they injected liquidity. And Isham says, yep, cash injections. Yeah. Very, very odd. So if you guys are not aware how the repo market works, basically banks have reserves funds that they have to have on hand open for business. And at the end of the day, when they close, if they don't have the reserves that they need, they have to go into the interbank lending, the repo market overnight, the repurchase agreements overnight to get the cash that they need to meet their reserve requirements to open the next morning. Most of the time, they can go into this market and they can borrow from other banks. So they're going to borrow from a bank that has excess reserves that can be a lender. And these are very short-term loans. So very, very short-term. Typically, they're like a day or two. As soon as the cash flow comes back and, the bank has cash flow on a daily basis, as soon as that cash flow meets their reserve requirements, they pay back that loan. And, they can go to, that's a weird thing, Isham. That is the weird thing. They're not only doing it last week, but now they're extending these the cash injections until October 10th. And that's very, very odd. And also, the loans themselves are typically a day or two. They're very, very short term. But I also heard that now they're extending the loan agreements out to a week or more, which is strange. So what's happening is, if you go back to the idea that there was an article that was read, and I think it was in the Financial Times that Brad Kimes read, and basically they said there are some banks, mostly the larger banks, JP Morgan, Citibank, and Bank of America, that have excess reserves, but they aren't putting them into the repo market. So other banks, like smaller banks, can't borrow from those excess reserve of other banks that do have excess reserves. So that's why the Fed had to inject cash liquidity into the market. Now, my theory is that there's been a recession coming for a while, and you have to think about why the banks do not have the excess reserves that they need to meet their reserve requirements. Why don't they have those reserves? And it goes back to the consumer and small businesses that the banks have been lending to for the last couple of years. It appears that default rates are on the rise. And so now banks don't have that cash coming in from repayment of loans in order to meet the reserve requirements. There was an article in CNBC. I will put a link to it into the chat. You can pull that up, Dan, if you can.
I just found Absolutely, we'll pull that guy over. Guess what? Guess what the magic number for last night was?
What, 100 billion?
You were close.
I had a feeling. Holy crap. So they've already done 203 billion last week, and now they're doing 105 billion just today. Wow.
Yep.
Wow. They said it's going to be $1 trillion before they're done in October 10th, but guess what? They may not be done October 10th.
That's the part that I found crazy because, yeah, when I sent that out last week, it's like, yeah, here we go, 4 days in a row. Then it was shortly after that they said, oh, yeah, don't be alarmed. We're going to do this for, 2.5 weeks. It's like, what?
Yeah.
Everything's fine, though. Nothing to pay attention to here.
Yeah, you caught on to that. And thank you for sending that to me because I wasn't aware that they were actually doing that for a second day even. I said, okay, well, they're going to do it one day. That's no big deal. But then they started doing it 2 days, and then they did it every single day. Now they're at 105 billion. Wow. In the 2008 financial crisis, they had to do it once for $550 billion at the bottom of the worst part of the financial crisis in fall of 2008. And they said that if they didn't do that, they would have had a shortfall of over $2 trillion in one day. Oh. And now they've already put in 300 billion in the last week, which is almost exactly the same amount they put in 2008.
And they're only halfway through it, so think about that.
Yeah, exactly. Just absolutely insane. So here's an article that was done December 24, 2018. If you guys recall, the Dow Jones Industrial Average and all the markets went down from like beginning of October through December 24th, actually. That was the last day. And basically, Mnuchin went out and said, hey, guys, do you have enough liquidity? I'm just checking here. I just want to make sure you guys have enough liquidity. You're going to be able to meet your reserves to be able to open up on, after Christmas on December 26th. And they said, yeah, but I think that was probably the beginning of the whatever they were seeing as far as a recession goes. They're starting to see that loan repayments, the banks had projected loan repayments coming in, and they were starting to see defaults at that time. And that's why the banks couldn't meet their liquidity and reserves requirements. And it's so for the past 7-8 months now, 9 months, I think it's only gotten worse. And that's why last week they had to start the injections of liquidity. One of the really weird things, as I started to talk about, was that banks that do have excess reserves were not willing to put it into the overnight interbank lending system, and instead they were investing in currencies.
Yeah,
that was just really
that's weird. More stable.
Yeah, that's really weird. Why would they not? So, in other words, there's a lot of banks. It sounds like there's a lot of banks out there that can't meet their reserve requirements. And that's why the rates went overnight to 10%, because it's an auction market. And so the banks that really, really need it in order to, open the next day are bidding up for the loan. So, one bank says, oh, I'll give you 2%. Now another bank says, I'll give you 4%. Another bank says, I'll give you 5%. And it got it all the way up to 10%. And that's what they had to pay in order to get the short-term liquidity that they needed. And that was pretty scary. I mean, can you imagine if they didn't inject the liquidity last week? I can't imagine what the overnight rates could have gone to. 15, 20, 30, who knows?
Yeah, where will it stop? It won't. It's like you say, it's an auction.
That's right. And the banks have to have it. And so they would pay almost anything in order to have it, because bank regulators will step in and say, hey, you're below the reserve requirements. You can't do that. We're going to shut you down. So very, 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 very tough. So this article was December 24th, 2018. I think that's when this kind of lack of liquidity started. Here's another, I don't know if you saw, did you see the tweet I sent out yesterday morning? The video of Danielle DiMartino
I was just going to say not lack of liquidity, but what's that other magic word we suddenly heard in front of liquidity?
Negative liquidity.
That's nuts.
I never heard that before. I mean, that's like zero liquidity. Beyond zero liquidity, so you have zero liquidity. I mean, you have like this. It's probably the oddest statement ever, because
Right.
how can you possibly have negative liquidity, right?
It's like I'm starting to I understand negative temperatures, so I understand where he's going, but that means it's really, really bad because I don't like negative temperatures.
Exactly.
When you start to think about it, if on the temperature scale, the way liquidity should work is it should be on Kelvin, where you can only go to zero and you can't go negative. Suddenly we're going negative with something that shouldn't be possible.
Right. How do you have negative liquidity? It's almost like, well, you could, because here, I guess if you use another analogy, it's like a household that doesn't have a budget, and you're basically going into a negative net worth, maybe.
I suppose you're just racking up credit cards and not paying it. So yeah, maybe that's one way of thinking about it.
But also, and the other analogy is exactly as you said. How can it go below zero? Because yeah, you can borrow and stuff like that. But let's say you're when you think of liquidity, you think of water, you think of like a well that you're pumping water out of, and all of a sudden that's dry. Now you're basically dying of thirst. Right?
Exactly. And if it's so if it goes liquid and it turns to ice, then it's done.
Yes, that would be very bad. That would be very bad. We don't want to be sucking on ice cubes to get our liquidity.
So there's okay. I'm just pulling up the one that you had yesterday.
Yeah, this video here is fantastic. This Danielle DiMartino Booth was an insider. She worked inside the Fed for 10 years, I think she said.
Oh yeah, I started watching her last night, this exact video. I think this is the one you're talking about.
Yes, great video. And this was taken in November. This video was done in November 2018.
This one here, right?
Yes, that one. 2018, November.
The sea of liquid.
And what she talks about in this is really, really fascinating, because she was inside the Fed for 10 years. She finally left, disgusted. Basically, she said that everybody else calls what the central bank does quantitative easing, but it's really just, hey, they're going out and purchasing crap. They're just going to purchase whatever crap they can in order to prop up prices and keep the system moving.
Yeah, they're just buying all kinds of ETFs and whatever, right?
Yeah, they're buying securities, they're buying ETFs, they're buying bonds, they're buying, whatever they could find in the market to provide that liquidity for the market. And so, well, here's where these two ideas converge. At that time, when she did that video, we had just gone through a couple of rate hikes. So they went to about 2.5%. They were hiking rates. And I think the last one was in December of 2018. And the market had dropped about 3,000 points at that time. So basically they were reducing liquidity. They were extracting liquidity from the market, and the market dropped 3,000 points. She mentions the fact that, normal rates should be about 3.5% to 4% in that video. Yep. Well, and if they stop short of that normalization, there's something seriously wrong in the economy. And they did stop short. They only got to 2.5%. So they're about a point and a half, 1 to 1.5 basis points short of their goal of normalization. And then, I remember even before Powell took over, Janet Yellen was saying, she even mentions Janet Yellen in this video that, hey, we'll never have another horrible recession like we had in 2008. What a stupid.
She just ripped her to shreds. It's hilarious. And Janet Yellen.
Yeah, that was really a kind of a dumb thing for Yellen to say. But anyway, so this normalization never took place, and things are going to get bad if they don't do that. And so there was talk Yellen was saying, hey, yeah, we're probably going to raise rates another 3 to 4 times in 2019. Well, just after the first of the year, when I believe that's when Powell took over, right?
Yep.
Or maybe it was just I know he was nominated and then he took over, I think, in January. He cut that talk completely out.
Yeah, because he knew that we hadn't raised fast enough, just like she talks about in this video. It's like, yeah, it was the slowest and most antagonizing raise after our QE and blah, 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 whatever you want to call it. It was the slowest tightening. It's just amazing listening to this woman and the insights she has.
Yeah, for sure. Yeah, I highly recommend everybody watch this video. Really, really good stuff in there. And then, so they had projected back in mid 2018 another 4 to 5 rate hikes over 2019 to 2020. As soon as Powell came in, he changed his mind completely. There was absolutely no talk of rate hikes. Instead, they started talking about a rate cut. So at that point, my ears perked up and I kind of knew something's not right here. They're not going higher. They're going to start cutting. And then that's exactly what they did in July. They cut a 1/4 point and they cut another 1/4 point in September. So which makes me think, between the article we just showed you, this woman's insights, and the fact that the banks now, this is where this converges. This is where these things converge with the injection of cash into the system last week, is that banks, instead of the Federal Reserve now doing QE and buying securities in order to prop up the stock market, they're going to have to prop up banks, because banks are seeing loan defaults rise and they can't get the liquidity they need in order to meet the reserves. So it's going to be the recession has already started. In other words, started probably last year. It's been slowly growing and it's going to start to accelerate and get worse, in my opinion.
Here it is right here. U.S. Fed repo schedule for September 23rd to October 10th.
Mm-hmm.
Here's what they're thinking: at least.
Yeah, at least. So they're saying, okay, well, it's going to be at least 75 billion, but it could be
or 105.
105, 200 billion, 300 billion. What's a couple $100 billion, and
Nothing to see here.
Nothing to see here. Now, a lot of these are, they're just basically they're not doing new notes, as far as I know. What does it say just above that, though? I think they're just printing. They're just pressing a button and printing money, right?
Yeah, it's just basically 2-week loans, right? 14-day terms.
Yeah. So it's the open window, the Fed. And so now they're going out for 14-day term. So in a normal market, and I say normal, but really the last 10 years hasn't been normal, banks will lend. If a bank has excess reserves, they'll lend it to a bank that needs a little bit of liquidity. And that's been working pretty well. And it's usually a day or two, because the bank that has the shortfall has cash coming in from their loan repayments. And so in fees and stuff like that. So whatever, cash flow that they have coming in, that usually is repaid. And so the short-term loans are repaid within a day or two. Now they're giving 14-day terms, which is pretty interesting too. They've extended the term. So they're giving banks even longer to repay, which makes you think that, hey,
it sounds like a house of cards.
Why do they need so much time? Is their cash flow? Are the bank's cash flows so bad that they need more time to repay these things?
Yeah, you say why 14?
Right. Why do they need 2 weeks?
Why do they not know how much they need? If you go to the loan, think, okay, I'm going to be Joe Consumer. I want to go buy a car. Hey, Mr. Banker, can I buy a car? Yeah. How much do you need? I'm not sure. I just want to buy some nice car. I'm going to need at least 50,000, but maybe more.
Right. At least 50,000. There's no cap in there, see?
But if I do find a higher one, you can just loan me that too.
Yeah. They say at least, I'm going to need at least 50,000 to buy that car, but it could be 200,000.
Right.
Yeah. I might go for the Lamborghini.
I'll pay you Tuesday for a cheeseburger today.
Yes.
All right.
Popeye always fell for that, didn't
he? So yeah, that's ridiculous.
Yeah. So this is really on the radar right now, and it kind of gives me an idea that the market is going to take a bit of a dip here. It may not be right away, but it's going to be, it's going to be building. I think the pressure. Once the liquidity, instead of injecting it into, QE is basically over, at least officially in the United States. But if the banks need liquidity instead of the markets, I think the Fed is going to shift from the markets, buying securities, but the interest rates are still low, which traders like, but still, they're going to have to shift their focus to the banks in order to help them meet their reserve requirements. There was a great website, and I can't remember the name of it, but I bet if you do a search for it, you'll find the number of banks that fail on a weekly basis. I was tracking that website daily in 2007 and 2008. And the number of bank failures started to reach kind of an all-time high right around, I think it was February of 2019. That's it, failed bank list. I would highly recommend, put that in the chat. I highly recommend that you keep an eye on that, because if bank failures start to rise, things are going to get pretty hairy here. I was watching that list almost every single day, and you can see in 2019 there has not been a lot of bank failures here yet.
Yeah, it looks like just the one, and before that was 17.
Yeah,
I sorted it by closing date.
Yeah, 2018 didn't look too bad.
Yeah, apparently nobody closed in 18.
Yeah, not too bad. Yeah, but that's something that I watched in 2008, 2009, very carefully every single day. Yeah, so how do you, let's see. Oh, wait a minute.
Yeah, look at 2009.
Yeah.
Pages are now full.
Yeah. Oh, yeah. Yeah, exactly. Look at that. Even going through August, July, August, yeah, it was pretty crazy.
Wow.
Yeah. Yeah, go to 2008. Whew.
I can't get there. There's too many closed in 2009.
I know it. Yeah, there was a lot. Every single day there was another bank closing. Yep.
So here's where it started, right? 2004. 3 years happy. Then we had 3 in 2007. Then it started trickling in January, March, May.
Yeah, and then it started to accelerate. Yep. Yeah, July, August, September, October, and November was a big month. December, and then you got into January 2009. It looks like it went all the way into August of 2009 after QE started.
And if you think about it, so look at so they're not just, so they're failing, right? So what does that mean? Well, look, we have an acquiring institution. So a bigger bank is absorbing the smaller bank that's failing. So what do you think is going to happen, or what would happen now if the big banks that have the excess liquidity are no longer lending to the smaller banks? Doesn't it feel like they're kind of just setting up to acquire them again?
Yeah, that's a good point. That's a really good point. Yeah, if they don't want to lend to those smaller banks and they know they're on the edge, then definitely it means something. It definitely means something here. They could be setting them up to make another large number of acquisitions.
Yeah, very possible. And that's that just jumped in my head.
Yeah, and you can see some of the acquiring institutions. U.S. Bank was a big one.
Yeah,
and they're big. They're a very, very big bank. I saw J.P. Morgan in there. State Street, State Bank and Trust. I don't know. That's not State Street though. That's somebody else.
Yeah, J.P. Morgan. Don't get me started. We don't have enough time. Did you see this stuff last week? I know you did. You had to have.
Oh, on
the racketeering.
Yeah, the racketeering charges. Yeah, aren't they the same ones who had the boatload of cocaine in the harbor?
Probably. Yeah, they were.
Yeah, I think so. What are they doing? That's insane. They had a boatload of cocaine seized in the harbor in New York, I think it was.
Greg asked, so would the bigger banks be a good investment if they're acquiring the smaller ones? I don't know if I'd invest in any bank at this point, Greg. Your choice, though.
Yeah. I'm not
but I
sure.
like what you think, though, looking for opportunities.
We have a local bank here that I could buy shares in. They're not public. They're not a public company, but I could buy shares in it. They're extremely conservative. Where most banks will leverage maybe 50 or 100 to 1 on their reserves, they do 2 to 1.
I have my share in my credit union for $5.
Yeah, very, very conservative.
Andrew says XRP is failing. Don't worry, Andrew. It's not a short-term game.
Yeah, falling. It doesn't matter what the price is. XRP there is absolutely no doubt in my mind, and not financial advice, as everybody says. But in my mind, it's only a matter of time before the utility and the liquidity they're bringing to the market is going to explode. There's absolutely no doubt about it. It doesn't matter what the price is. In fact, the price right now is, it's been so good for acquisitions, for actually purchasing XRP. It's just been amazing.
Yep, it's accumulation time right now is what it is.
It is accumulation time, yes. And I don't think that's going to last long. I think there was a negative correlation between the stock market and cryptocurrencies for a while at the beginning of the year. And I think if the market starts to fail again, we're going to see, and that's what caused Bitcoin really to go from 4,000 up to 13,600 was that negative correlation. We had a little bit of weakness. And I think if that should happen again, Bitcoin's going to go through the roof. XRP is going to go through the roof. There's a couple other coins that will probably do that as well. But there isn't a single digital asset out there that has more utility than XRP. None. And it's going to be insane, I think. I think people are going to look back at this time and see it at 26 cents and they're going to say, oh my God, why didn't I mortgage the house to get it?
Right. Exactly.
Yeah.
The Shamas, you're waiting on your ledgers. Good job ordering that.
Good.
A small amount, though, when I do purchase. Yeah, whatever amount, that's completely up to you. You don't have to wait to get the ledger. It's on sale right now, so you can buy it right now if you want. If you see it as a good investment, again, Dave says we're not investment advisors, and leave it in the online exchange, whichever one you use, Coinbase, BitTrue, Bitstamp, wherever your favorite country is. You can buy it right now as long as you have that account funded. You don't have it. Yeah, it is good to keep it in cold storage, but don't let that stop you from, if you're ready to at least acquire it.
Yeah, you don't need to wait. You can hold a little bit if you're on, whatever you want to buy. You can hold small amounts on exchanges, especially if it's Coinbase, Binance, BitTrue. Those are the 3 exchanges that I think are extremely worried. Or I just read your words.
Extremely secure.
They're extremely secure, and I would not worry about them. Yeah, BitTrue is a good exchange. I like them a lot. I wish I could use them, but I can't because I'm in New York. And Binance is also very, very good. So I would not worry about having a little bit on those exchanges. They're very secure, and they're also insured. I believe BitTrue is insured. So, and Coinbase is insured as well. And then when you get your Nano S, just transfer it.
Yep.
You're good
Absolutely.
to go. Mm-hmm. Good. Yes, absolutely. I wouldn't wait. I mean, if you're going to make a purchase, whatever it is, the best time to start is today. And dollar cost averaging is your best strategy, in my opinion. I do that. I actually started buying in September 2017 when XRP was about 24 cents. I didn't have a lot into it, and it went up to $3.20. And I said, wait a minute, something's going on here. This could be interesting. And I actually bought quite a bit at $2.10. And then as the entire market started to decline through 2018, 2017, 2018, all I've been doing is buying on a regular basis as I could. And I got my break-even point down from over $1 at one point down to 38 cents.
Nice.
Yep, my break-even is 38 cents now.
Nice.
So as soon as it starts moving up, I'll buy as long as it's under my break-even point. I'll continue to buy because it would better. Yeah, just continue to lower my break-even point. Once it's over my break-even point, I'm going to stop buying because it doesn't make any sense to raise my break-even point, especially when I've accumulated what I consider to be a small fortune in XRP. It's gotten quite large, and it's the one. I think it's the one digital asset that's really going to do some amazing things. They are so far ahead. The team at Ripple is supporting the ecosystem. R3 is supporting the ecosystem in XRP. SBI Japan is supporting the ecosystem. And when you have these kind of players in this market, all supporting the XRP ecosystem, something has to happen. It's going to happen. It's almost like buying Amazon at $5 after the .com crash. Amazon is going to be gigantic at some point. They're going to, it's just going to happen. I have zero doubt. Zero.
What was the last thing you said? You got zero what?
Zero doubt.
Oh, zero doubt. Absolutely. Yeah.
Zero doubt. So, just as a side note, do you know why everybody says, this is not financial advice?
So you don't get sued.
No. No, that's not it. Everybody keeps saying that, and it's hilarious. It's kind of funny to me that everybody in their videos say, "Oh, this is not financial advice, guys, but this is kind of what I'm thinking, and this is what I'm doing, and just in my opinion." The reason, I'll let you guess. Why do they say this is not financial advice? Because number one is, according to the FTC and the FCC guidelines, we're speaking to a group of people. So you guys are all in a group. I'm not speaking to any one of you individually. Even though I'm answering your question, Hisham, it's not direct. That's why I said it's not financial advice, because I'm not directing it directly at you. It's a group of individuals. This is a chat of in a group. But why do you think most people say it, but they don't understand really why they're saying it? Do you have any idea?
Mine was illegal, so we'll see if anybody else wants to throw in a guess.
It's a legal disclaimer, yeah, but why specifically do they have to say that they are not investment advisors or registered investment advisors? Or
because they're not licensed on the SEC to have fiduciary responsibility.
Right, they're not licensed, but what's the big deal? There's something else behind that makes that most people who are saying it don't understand why they're saying it.
Because they heard you say it.
No, the reason why this whole thing started, and the reason why people say it, is to let you, because who does the CFTC, the SEC really come down on? If you are a registered investment advisor, every single day the SEC is taking actions against those who are registered. See, they're taking actions against those who are registered, who are doing things that they shouldn't be doing. And so by announcing the fact that you're not an investment advisor, you're not under the regulations. I mean, you are in some sort of a way, but not really, because you're speaking to a group of people. So that kind of excludes you. But by saying that you're not a registered investment advisor, and this is not investment advice, whoever is listening to this, if it's the SEC or the CFTC or something like that, you're basically telling them, well, I'm not a registered, so you can't actually come after me. I mean, they can. I mean, if you make stupid statements like, oh yeah, and you talk to one individual person and you say, hey, this is what you should do. No, that's you can't do that. They will come after you. But the fact that you're not registered means that they have less legal firepower. So if you are a registered investment advisor or you are registered with the CFTC, then you have to be very, very careful what you say, because they have all your documentation. They know who you are. You registered, you agreed to certain ethical and fiduciary responsibilities as a registered investment advisor, and they can come after you. But if you're not, you're just Joe Blow, giving your opinion, and there's nothing to say that you can't give your opinion about things. So it makes it very easy for them to go after those people. And that's why you say, I'm not a financial advisor.
Well, it sounds like it's just more reason not to be an RIA in the long term.
Exactly. Yeah, exactly right. Yep, that's exactly right. Because once you're registered, you're under their control.
Yeah, you got a target, or you have a potential target.
Yep. Absolutely.
Well, you learn something new every day.
Yes.
All right, guys, we're about to the top of the hour, so if you missed anything, shoot us an email. We'll try and grab it on Thursday. Have a fantastic week. And just for a side note, I know you guys heard us talking about who we're following, all that good stuff. If you haven't seen yet, obviously, I'll just pull over YouTube real quick. Brad's the one that we're watching for the couple shows today. He's probably actually live right now. Digital Asset Investor is another fantastic source of information, as well as the Bearable Bull. And I will throw in their channels in the chat so people have it that are watching the recording. So in case you don't get it live, but highly recommend all three of those. And obviously Strong Market. Got to have Strong Market on your list.
Yeah, glad to see that.
So keep those guys on your top list and subscribe so you get the warning. See, I got 3 right now. Probably telling me that Brad's live. See that? Brad's live right now. So we'll check out his recording later.
Yep. So yeah, those two guys, especially Digital Asset Investor and Brad Kimes, are probably the two best in the space, in my opinion, if you want to learn everything you can about XRP. The Bearable Bull is just very entertaining. I enjoy listening to him too. He's just fantastic, and he's got some incredible insight. But he's more entertainment style, I think, and he's just fun. He's just a fun watch.
For sure.
Yeah. All right, guys. Have a great couple of days here. We'll see you again on Thursday morning. And we'll hope maybe by then, we'll be up to $500 million a day in repos. So we'll see.
Crazy talk. But yeah, we'll see.
All right, guys. Have a good one. See you, Dan.
All right, guys. Have a great week. Appreciate your time, everyone.
Yep. Bye.